Worried about the financial landscape ahead?
Get the insights you need from top analysts like Joseph Wang and Bob Elliott.
We harness AI technology to distill hours of analysis into clear, actionable summaries, saving you precious time.
Stay tuned to navigate the financial currents with confidence.
In this episode, we are joined by Joseph Wang to analyze the current market landscape.
He highlights significant volatility and geopolitical risks that may impact investors.
Joseph Wang indicates that inflation and geopolitical tensions are contributing to an unstable market.
He cautions that investors need to brace for possible downturns due to these influences.
Joseph Wang suggests that ongoing global tensions could seriously affect market direction.
He advises investors to be adaptable and ready to refine their approaches.
Joseph stresses the importance of diversification in coping with market volatility.
He suggests that considering a breadth of asset classes can help manage potential risks.
What does Joseph Wang foresee for the equity markets moving towards 2025?
He predicts a potential downturn in equities as economic conditions become more challenging.
In conclusion, Joseph Wang advises that establishing a solid strategy is important in managing future market challenges.
He emphasizes the need for ongoing monitoring of the market and being flexible in investment strategies.
Today, we're analyzing Fannie Mae's recent warnings regarding mortgage rates, as discussed on Real Estate Mindset.
Fannie Mae indicates that mortgage rates are set to rise significantly, affecting homebuyers and the overall housing market.
Fannie Mae suggests that homebuyers need to prepare for significantly higher monthly mortgage payments.
The implications indicate that rising mortgage rates could deter many from purchasing homes, subsequently reducing overall demand.
Fannie Mae highlights how inflation is a key factor influencing the rise in mortgage rates.
This inflationary impact results in higher costs for borrowers, which are reflected in their mortgage agreements. According to Fannie Mae, the increasing mortgage costs might push some buyers out of the market, potentially leading to price adjustments.
The sentiment among potential homebuyers is shifting towards caution due to these economic pressures. Fannie Mae advises potential buyers to evaluate their financial situations in light of upcoming rate increases.
Timely actions, such as locking in mortgage rates early, could help mitigate risks associated with rising rates.
As we look ahead, what does Fannie Mae forecast for mortgage rates and the housing market?
Fannie Mae expects mortgage rates to remain volatile, presenting challenges for prospective homebuyers and impacting market stability.
In conclusion, successfully navigating this changing environment requires adapting financial strategies to prepare for possible higher mortgage payments.
Fannie Mae encourages individuals to stay informed and proactive in their homebuyer strategies as the landscape evolves.
In today's discussion, we explore economic forecasts shared by Michael Oliver.
Michael anticipates a downturn unlike any we've seen, stressing the importance of preparation.
Michael warns we may be facing an unprecedented downturn.
He emphasizes recognizing signs of an approaching economic challenge. Michael highlights inflation and job instability as crucial indicators.
He suggests these trends may signal significant contractions. Michael advocates for grasping past cycles to inform present strategies.
He believes lessons from history are invaluable for navigating upcoming challenges.
What does Michael suggest regarding investment strategies amidst the downturn?
Michael recommends prioritizing defensive strategies like investing in precious metals.
Michael encourages proactive rather than reactive investment strategies.
He suggests ongoing analysis of economic indicators to stay prepared for the downturn.
In today's session, we'll discuss the current market trends and what they mean for investors.
We'll highlight significant movements in the equity markets and discuss potential impacts on various sectors.
Experts have noted that the equity markets hitting new highs may show some underlying vulnerabilities.
Market analysts suggest that this mixed performance could suggest changes are needed in investment strategies.
What do experts say about the importance of economic data this week?
Analysts emphasize that the upcoming economic statistics are crucial for market sentiment.
What investment strategies should be considered during current market conditions?
Experts recommend caution and reassessing positions as the market undergoes changes.
What predictions are being made regarding potential market corrections?
Analysts project the possibility of market corrections, particularly as more economic data is released.
In conclusion, investing in the current market landscape requires adaptability and awareness.
It's crucial for investors to consider diversification and stay updated with economic indicators.
Today, we're analyzing the massive recent move in interest rates discussed by the financial experts at Eurodollar University.
The analysts explain how this shift will affect borrowing costs and forecast inflation moving forward.
The analysts point out that rising interest rates mean higher borrowing costs for both consumers and businesses.
This shift is expected to negatively impact overall economic activity.
How do these increased rates affect consumer borrowing?
The analysts note that higher mortgage rates could slow the housing market.
This significantly raises the cost of loans for consumers.
What do the analysts predict for inflation as rates rise?
They argue that increasing interest rates may help keep inflation manageable.
What predictions do the analysts make about future economic conditions?
They foresee a slowdown in growth, with increased rates possibly causing greater market volatility.
The analysts conclude that consumers should closely watch for changes in borrowing costs and adjust their budgets.
Investors are advised to reconsider their investments in light of rising rates and potential market volatility.
Today, we're discussing Bob Elliott's analysis of recent trends in personal incomes and the effects of broader economic factors.
Bob highlights that these trends are influenced by several factors, including inflation and changing economic conditions.
Bob Elliott details the core influences driving the decline in personal incomes, emphasizing inflation as a critical factor.
He notes that inflation diminishes purchasing power significantly, impacting many households.
Furthermore, Bob indicates that changes in the economy have a pronounced effect on household income stability.
Bob discusses how inflation is currently outstripping wage increases, leading to a decrease in real income.
This disparity creates significant challenges for households in managing their expenditures. A pressing issue addressed by Bob is the stagnation of wages, where many employees find their earnings failing to keep pace with rising living costs.
As Bob suggests, this stagnation can impact consumer confidence significantly, affecting overall economic health.
Bob forecasts that if inflation is not addressed effectively, personal incomes may continue to decline.
He warns that household financial pressures could exacerbate if proactive measures are not taken.
Bob concludes that effective policy interventions are essential for addressing the ongoing inflation issues affecting personal incomes.
He also highlights the importance for households to carefully manage their budgets in this challenging economic landscape.
What an insightful journey we've taken today with our experts.
Definitely, each guest provided their unique perspective. Bob Elliott's insights on inflation's impact on personal incomes were particularly striking.
I loved how the Eurodollar analysts connected interest rates directly to borrowing costs. It's a crucial point.
Absolutely. And Michael Oliver brought in an element of suspense, talking about imminent market volatility.
Right. He really made me think about how historical cycles can guide our investment strategies.
And let's not forget the Fannie Mae discussion on rising mortgage rates and how they're going to reshape the housing market.
Exactly. It's a wake-up call for potential homebuyers to reassess their plans.
Speaking of reassessing, Joseph Wang emphasized the need for investor diversification amidst all this uncertainty.
Which leads us to the common thread, the pressing need for vigilance in this volatile economic landscape.
If today's discussion ignited some thoughts for you, don't forget to like and subscribe.
Your engagement helps us bring more valuable discussions just like this to you.
And don't miss out on our next video, where we'll dive into more of these compelling financial dynamics.
Thanks for joining us, and until next time, keep questioning and stay informed.